Good afternoon, everyone. This is Valerie Wendt, Vice President of Product Development here at Surgent CPA Review. We're so glad you're joining us this afternoon to learn more about this new document review simulation, DRS, that's going to appear in the exam starting on July 1st of this year. This particular webinar is going over specifically what the new DRS is going to look like in the regulation section. Presenting today is Jack Sergent, Chairman of Surgent Professional Education, and has his own tax practice. Along with him is Liz Kohler, Vice President for Surgent CPA Review. You all know Liz and her teaching style and the way that she attacks the CPA exam, and we're so glad that they're both here. I'm going to go ahead and turn the presentation over to Jack in just a moment. During the presentation, in your webinar tool, there is a question box. If you have any questions throughout the webinar today, please feel free to submit those questions. We will save some time at the end of today's webinar to go through those questions and so that Jack and or Liz can answer those for you. So with that, sit back and enjoy, and I'm going to turn this presentation over to Jack.
Well, thank you, Valerie, and thanks everybody for joining us here today. So I actually cover on the CPA Review the reg section on taxes. I was a college professor for a number of years, and I have a master's degree in taxation, and part of my life is training CPAs on taxes. So it was really interesting for me to look at this new document review simulation that the AICPA came out with, and I'll be discussing with you today. Just by way of an introduction, let me tell you, this is tough, okay? Just right off the bat, we're going to try to help you just understand a number of issues that you need to understand, but also to kind of just show you the difficulty of this new review simulation. So first of all, just as part of an overview, in the reg section, when you begin to take the reg section of your exam, they give you basically 10 minutes to go through all of the directions. And if you were to sit in the exam itself and read through that, all of those instructions and use your 10 minutes, if for some reason you did not basically finish those instructions within 10 minutes, believe it or not, your screen would go dark and you would have already failed the exam without even starting. So one of the things you want to do and pick up that extra 10 minutes of time is to know all of these instructions ahead of time. And basically one way that you can do that is either take a review course, or up in your right-hand box you can go to www.aicpa.org and basically read those instructions and take a very simple sample test. The whole advantage of that is to fully understand the directions of how to take the exam and how this is going to work is going to be very beneficial, because it'll give you 10 more minutes to actually use your time effectively to take the exam itself. So again, just a little practice pointer as we get started here with these issues. So what I'd like you to focus on here in this new document review simulation is the information at the top boxes. So what happens is that up in your top left-hand box, we have the document review, which is basically information on what the task is going to be. And we'll take a look and read through these as we kind of get a little bit further along. But just to show you, you have document review, and then you have authoritative literature. And if you see up in the left-hand box, you have full access to the Internal Revenue Code and tax services, which is basically additional information. So trust me when I tell you you're going to need that, because there's no way all of us are going to have memorized all the code sections in the Internal Revenue Code. The third part is your tax depreciation worksheet for this particular example. Okay, so this could change depending on the simulation that you're dealing with, but they're giving us a worksheet of different property and how they basically depreciated that property. And we'll come back and deal with that as well. Also, as part of the document review simulation, there's going to be a number of exhibits. And obviously one of the keys here is to spend your time reading through these exhibits and understanding what's being presented. The last box is a help box. Now actually you should never use that help box, because it's instructions on how to answer the question. So you should have done enough of these simulations in practice sessions that you're never going to need to deal with this particular box or issues. So just giving you a little bit of a breakdown along those lines. So let's go slow and talk about how we would go about solving this example from the AICPA. So first of all, one of the important things I want to remind everybody is it's critical to read the entire problem. Take your time and read through it. Matter of fact, I was telling Liz this morning, when I was in college, in my intermediate accounting course, I still remember my professor very well, and he gave us an exam one time, and the exam at the top said, before you begin this exam, please read through the entire exam before beginning. Well, you know, I'm in a rush like a lot of kids are, so we start answering the questions. Oh, this is good. We're going to get this all done. We turn over the exam. We get to the last question. The last question says, do not complete any of this exam. Please hand in your paper blank. And effectively, anybody that wrote anything on their paper failed the exam. And look, I am 58 years old now, and I still remember this as clear as day, that I screwed up my average in my intermediate accounting course because effectively I didn't read the instructions. So reading the instructions is critical, and we're going to do that. So let's go slow and read through this together. So Smith & Company CPAs has been engaged to prepare Form 1120 U.S. Corporate Income Tax Return for Lilac Corporation. As part of the engagement, the Year 9 purchases of property, plant, and equipment were reviewed to determine whether the tax basis of each fixed asset acquired in Year 9 is accurately reflected on the Tax Depreciation Worksheet shown in the Tax Depreciation Worksheet tab. Documentation of the purchases can be found in the Exhibits tab. After an initial review of the documentation, a staff associate prepared a draft letter to Lilac's controller. John Park, the partner in charge of Lilac's engagement, has asked you to review the documentation and revise the letter, correcting any errors. To revise the document, click on the segment of underlined text below and select the needed correction, if any, from the list provided. If the underlined text is already correct in the context of the document, select original text from the list. So a couple quick comments on this if we could. So one of the things is that comes to mind to me is we got to be careful that we're talking about Year 9 purchases, because maybe there's other years involved, so we want to be really careful about this issue. And you understand why they're calling this a document review simulation, because effectively they're giving us real life kind of letters that you might provide, and again, I'm a partner in a CPA firm, that you would have someone prepare for a controller, so they're trying to make a more of a real life simulation type issue. Now we'll talk about whether that's good or bad when we get a little bit further in. So basically, if we start at the top of this letter, Smith & Company, it says, Dear Michael, okay, we have completed our review of the Year 9 property, plant, and equipment purchases as detailed in the tax, and it goes on from there. So we're looking at the next part of this letter. So basically, just some quick choices here. You see 3 sentences that are in blue. So, and there's little boxes there next to those issues. So it means that we're going to have 4 problems to solve in this document review simulation. And as we will see in just a few minutes, this can really bog you down. Basically speaking, you should spend approximately 12.5 minutes to complete this entire problem. Now, I'm going to be really honest with you guys. I went through this. I got a master's in tax. I teach taxes every day. I couldn't get this done in 12.5 minutes. I couldn't get it done. And I know this stuff cold. So the problem is that what we got to do is we got to focus on how to maximize our points. And we will talk about that when we get a little bit further in. But for the moment, let's just start through and talk about this in a little bit more detail. So if you pick up where it says, right under that first sentence, it says parcel of land at Wayside Street, Greenburgh. And it says the tax basis of the land located on Wayside Street is recorded on the tax depreciation schedule at $72,563. We have reviewed the eminent domain letter. Whoa, here we go. We have reviewed the eminent domain letter from the Township of Greenburgh's purchase of the Parkway Avenue property and the HUD 1 settlement statement for the purchase of the new property on Wayside Street. Stop there. So all of a sudden, I read that through once, and I got to tell you, I'm trying to figure out what are they getting at here. So let's go slow for just a minute, and we'll come back to this in more detail. But I'm going to read it again. The tax basis of the land located on Wayside Street is recorded at $72,563. Well, it sounds like they bought a piece of property for $72,563. And normally, if we were going to do a depreciation schedule, you know, that would be what we would depreciate, maybe minus any land, but again, that's a whole other issue. Then it goes on to say we reviewed an eminent domain letter. Now, what the heck does that mean? Well, an eminent domain letter means that somehow this company, Lilac, must have owned some property, And under eminent domain, the government has taken the property back. And when they do that under eminent domain, they have to pay you the supposed fair market value of the property. So there's a property that is been purchased, which is Wayside Street, and there's a property that basically has been condemned effectively under eminent domain, which is Parkway Avenue. And then it says, in accordance with Code Section 1041, the new property is correctly reported at tax purposes of $72,563. Well, in a normal purchase of property, that would be right, but what we're dealing with is this crazy issue of eminent domain. And this is where you can really get bogged down, okay? And we will talk about this when we get a little bit further in. So understand, and again, the parcel land is one question. Then the second question is there's a color copier that was purchased on April 15th, year 9, properly reflected on the tax depreciation worksheet as 5-year property. However, this asset is incorrectly recorded at a tax basis of $11,000. That tax basis should be recorded for the color copier as $19,000. Again, we're just trying to get the facts here. So there's something about a color copier. Then there's manufacturing equipment that was purchased on June 15th, year 9, properly reflected on the tax depreciation worksheet as 7-year property. The tax basis is $180,000. However, that is incorrect. The amount to be capitalized for the manufacturing equipment is $209,100. Okay, so you have these different choices, right? And then the last one is a van. On August 1st, you traded a 5-year model delivery van for a new delivery van, paying cash of $23,300, as indicated on the invoice from Beachside Car and Truck Sales. And the year 9 delivery van tax basis is reflected at $23,300, and they're saying that's correct. So, in other words, certain things are saying is correct, certain things are incorrect, but they're saying that because there's 4 blue marks here, there are 4 parts to this question that have to be answered, and they are not tied together. Each one is separate. So effectively, we should be able to get separate points. Okay, so here we go. So we're going to start with the first piece of information, which was this parcel of land at Wayside Street that was purchased, and also the parcel on Parkway Avenue that was sold. And if we look at the documentation, the first document we're going to look at is something from the Township of Greenburgh. And again, we got to get our right locations correct. So notice at the top here it says property location Parkway Avenue. So that's the one that basically is subject to an involuntary conversion. Now let's go slow. It says, Dear Lilac Cork, as you know, it is necessary for the Township of Greenburgh to construct a highway that requires the purchase of the property referred to above. Inasmuch as negotiations to purchase this property, which started on April 1st, year 8, have not been successful to date, a final offer is hereby submitted to you. According to authorization of the Greenburgh Transportation Commission, a sum of $71,800 is offered for the required property rights subject to clear title being delivered. Any compensation that may be due to you from this department's relocation assistance program is not included in this offer because such funds are paid to eligible persons separately. So in other words, if this property was just purchased by anybody else, we will have sold this property, okay, this Parkway property for $71,800. But the problem, it wasn't sold, it was subject to basically eminent domain, which is the government buys it back. And that means that there might be something special under the tax law to apply to this. Now let's keep going through the other documentation we have. The next piece of documentation is a HUD-1 settlement sheet. And if you look at the location, property location, this is 532 Wayside Street. This is the property that we bought. And if you're not familiar with a HUD-1 settlement sheet, which again, this is a practical settlement sheet, you see the left-hand side says summary of buyer's transactions, and the right-hand side is summary of seller's transactions. We're the buyer, okay? We're the buyer in this case. And if we scroll down and look at the bottom of this sheet and look at line 120, the gross amount due from the buyer is $72,563. Now, let me just tell you something straight up. In real world, and this drives me nuts, okay? I'm just going to tell you, this problem drove me crazy. If you look at line 101, it says the contract price to purchase the property is $70,000. And if you look at line 104, the amount of taxes that the buyer is reimbursing the seller for is $2,563. Now, in real world, because I'm a tax guy, if somebody asked me, what's the basis of the property you acquired? I'd say $70,000, because we would take a tax deduction for the $2,563 of taxes. So I would think, looking at this, that the answer is 70 grand, but remember, let's read everything. So we have now looked at the settlement sheet, and the bottom of the settlement sheet just talks about how you paid for it, but it doesn't matter. We paid the full price effectively, whether it's with debt or cash, so we have to determine the basis. With that, just talking about other information that's been provided, the next talks about basically a copier. So it's not related to the first part of the equation, but it's good to know. That's going to be information on the copier. The next deals with information on the manufacturing equipment. And the last invoice deals with information deals with an invoice on purchasing the van. So we'll need that for the other parts of this particular question. So, and we'll come back to this. So let's talk about opening our first part of the problem. So what we need to do is we need to click effectively on the first part of the problem, which says, in accordance with IRC section 1041, the new property is correctly recorded for tax purposes at $72,563. When we open that, we're going to see that there are basically 6 answers potentially to this question. And the question is, which of these is right? Now, if you scan those answers real quick, you'll notice that the first one says original text is right. The next one says basically under 1033, section 1033, it should be recorded at $72,563. The next one is section 1033, it's recorded at $71,800. The next one is under section 1041 at $70,000. The second to last one is under 1041 at $63,763. And the last one is under section 1033 at $63,763. So I'm going to tell you how I would look at this problem. I would look at this and say, if I'm a regular person, I'm going to say, wait a second. 3 of these answers apply to code section 1033, and 3 of these answers apply to code section 1041. So I better know what each of those sections mean, because one of those sections is right and one of those sections is wrong. So I can basically cut my probability in half of getting this question right or wrong. So the way that I would do this is I would go to authoritative literature, and what I would then do, and we'll see this in the next slide, is I would type in code section 1041. And this is what you would see. You would see a screen like this on code section 1041. Now, lots and lots of information there, but then I would basically click on the first box of 1041. And again, if you look at item G, what comes up is it says, transfers between spouses or incidents to a divorce. Well, code section 1041 then has nothing to do with an involuntary conversion or an exchange of this real estate. So right now, I've just eliminated 3 of the answers as wrong. But I think that I want to double check though, so I'm going to also type in, I also typed in 1041 involuntary conversion, nothing came up with that. So I then typed in the next code section, section 1033. And again, I click on the first open item, and it says something about 1031, treatment of property acquired in a 1031 or 1033 transaction. And then I would click again on 1033, and it says basically qualified replacement property means real property which is acquired in an exchange which qualifies under 1031, or the acquisition which results in non-recognition of gain under section 1033. And if you go down to item 2i, it says basically replacement property means property transferred and exchanged under 1031, or property that is involuntarily converted. So now we got it. We now know that we are under code section 1033. So I now know 3 of the answers are already I can eliminate, and I'm down to the final 3. Now, if I wanted to get to it quicker, if I typed in 1033 involuntary conversions, that would wham bam get me right into the right spot. So understand that I just didn't have to type the code section, and I could type the code section with some additional wording and maybe get to a clearer answer along those lines. Now, all the time, gang, I want to remind you, we're burning time trying to figure out what the heck is going on with this deal. So finally, let's take a look at our depreciation worksheet, and let's look at this land for just a minute. So for example, if you look under land, it says land 2nd Avenue Beechwood. That was acquired in year 1, and its balance is $75,000. Okay, no problem. That must be land that they currently own. And again, if you wrote some notes down, we talked about Parkway Avenue. What was the Parkway Avenue? That's the property that we sold. And then the Wayside property, because it's under current year additions, that's the property that we purchased. So moving on here a little bit, if we would, just seeing here along those lines, it's showing the current additions of the property we acquired, Wayside, for $72,563. All right, now, we also read this letter that basically said that basically we had an involuntary conversion and we got money of $71,800. It's like being sold. Okay, well, what does that have to do with adding a property, which is the property that's acquired? Well, here's where you got to know some tax stuff, and let's get a little bit further. Before we go crazy with this, though, let me just explain what's going on. With this letter, at the bottom of the letter is a box, and I want to go slow and tell you how crazy this particular part of the problem made me. So it's in script. So basically it says, we decided, this is the owner of the property, okay, this is the Lilac Company. We decided to accept the offer from the Township of Greenburgh for the vacant property located at 462 Parkway Avenue, Greenburgh, New Jersey. Replacement vacant property was located on Wayside Street in Greenburgh, New Jersey. So there was replacement property. Please note that we elected to capitalize the real estate taxes for tax purposes. Now, gang, I want to just tell you, if you remember what I said to you earlier, okay, I said to you, hey, you know, normally when you bought that property, the new one, you paid 70 grand for it, and normally you just write off the taxes. Now, I got to tell you, I didn't pick this up the first time I read through this problem myself. And what they're saying is, although I would always deduct the taxes every time in practice, the AICPA is throwing a curveball on us by making me capitalize it on top of it. You talk about being complicated. This is nuts, but we got to figure out how to do it anyway. So let's keep going. So basically, here's what the tax law says. Remember what the settlement sheet said? It was 70 grand on this property, but we also had the taxes, which they're saying they're capitalized. So the property we're buying actually cost us $72,563, and all of that would be capitalized. So wait a second, stop there for a minute. So in the normal realm of taxation, if you bought a property, you'd book it for tax at $72,563. But remember, there's this involuntary conversion issue. Okay, what does that mean? Well, it means basically the property that they bought from us, okay? In other words, we got paid $71,800. We got paid $71,800. And what happened is that normally our basis in that property would only be $63,000. We would have a tax gain. But because it meets the requirements of an involuntary conversion, you don't have to pick up the gain for tax purposes. But what that means is that your basis is not stepped up to what you paid for the property. Okay, your basis is normally a carryover basis unless you're out some extra dollars. Again, all of you are probably sitting here saying, holy crap, I hope I don't get this on my CPA exam test. And I agree with you, all right? And we're burning more time. So hang with me. So here's what's going on here. I would pull up my calculator and I would say, wait a minute, what did I get? I bought a property for $72,563. That's what I got. And what did I give up? Okay, well effectively, I purchased a property for $72,563, and I got $71,800 in cash in that property that was involuntarily converted. So effectively, I put out an extra $763 of cash. On top of that, though, okay, I get a carryover basis because I didn't have to report the gain. So I get to add that to my original basis in the property of $63,000, and I'm coming up with a basis of $63,763. And you're saying to yourself, man, I don't know if I'd ever get there. Well, now let's follow the Jack Sergent rule of thumb. Okay, here's our deal. What we said is this. Here's how I would really solve this problem, okay? If I had to do this quick and dirty, I just determined that half of the code sections don't apply. The 3 that dealt with 1041 do not apply. So it's got to be a 1033. And I'd say to myself, wait a second, what did I buy the new property at? I bought it at $72,563. So that could be the second bullet. But I know because it was involuntarily converted, I didn't have to, I got to roll over the basis of the old property. So it has to be less than that. So then you could come down to $71,800, but that can't be the right answer under Section 1033, the third bullet. That can't be right. Why not? Simply due to the fact that, again, the old basis of the property was $63,000. I don't know what the right answer is if I'm just guessing, but I know it's under 1033, and I know it's got to be a lower basis. So I would make the educated guess, and we actually know the correct answer is the last bullet. So in this case, what I would tell you is that you would effectively, the icon indicates the question is not answered, so we're just talking about this. So how do I select it? I would hit the bullet point. Okay, when you hit that, notice that the icon changes to a check mark, and then I would hit accept to basically accept that answer. And from there, I would then move on to the next part of the question. Now, gang, I might have burned all of my time on this particular point. So again, in certain cases, your best thing is to skip it if you think it's too hard and try to pick up the easier questions. And let's talk about the next one as an example. So the next question is color copier. The color copier was purchased on April 15th, year 9, and is properly reflected on the tax depreciation worksheet as 5-year property. However, this asset is incorrectly reported at a tax basis of $11,000. They're basically saying, this kid that's writing this out is saying that the tax basis should be at $19,000. Well, again, we're given all these different choices, including the original text is correct at $19,000, but let's think about that. So we have to look at other information that we have. So there is information that says the color copier cost $32,407. We had to pay sales tax, so the total billed was $35,000, and basically they financed it. And it says, John, we decided to finance the purchase of the color copier over a 2-year period with a promotional loan offered by Elmer Office Equipment. We paid a deposit of $11,000 and began making principal payments on the loan. So what happens there? What is your basis in the property? Well, it's what you paid for it plus the sales tax. So this is a pretty easy one. I can pick up some quick points here by clicking basically the third box down. The tax basis should be $35,000. Click the accept button, and wham, bam, effectively along those lines, I can move on to my next question. Manufacturing equipment. Let's get some more points. The manufacturing equipment of your purchase on June 15th, year 9 is properly reflected on the tax depreciation worksheet as 7-year property. The tax basis of $180,000, however, is incorrect. They say the amount that should be capitalized for the manufacturing equipment is $209,100. Again, we wind up clicking on the box and we find the different choices here. Again, it's not like a multiple choice. You get 4 choices. They're giving you 6, so obviously it makes it a little bit tougher. Now, having said that, okay, let's take a look at our tax depreciation worksheet and look under manufacturing equipment. So they're saying, hey, the manufacturing equipment that they put on here is $180,000. Okay, so that's what they added. Now we look if there's any additional information. So here's what we're told. The machinery was 5-year property and has a 5-year warranty. They paid $180,000. You also had installment charges, which under tax purposes add to your basis. Shipping costs also add to your basis. Transit insurance also would add to your basis. But they also included an extended 2-year warranty. Now, again, you just have to know this, but the warranty is effectively not included in the basis. Now, here's what's pretty tricky. If you look, the subtotal is $200,001, and the sales tax is charged on the machinery only. So the good news is they figured that part out, so we didn't have to make an adjustment for sales tax. But the key to understanding this problem is you cannot capitalize the $3,500 warranty charge. So basically, you take the total cost of $209,100, because you don't have to adjust for sales tax, subtract the $3,500, and the correct answer we would get is $205,600. And we see, is that a possible answer? So we click, and item 2, the amount to be capitalized for the equipment is $205,600 respectively. We hit the accept button, and wham, bam, we've picked up some more points relative to this question. Now again, just want to remind you, gang, that we're talking about trying to solve this whole problem in about 12.5 minutes. So throughout the exam, you have to be very cognizant of your time. If you look at the top, notice it says time remaining 3 minutes. Now that's not time remaining of this simulation, that's time remaining of the whole basically reg section. But once you get below 3 minutes, what happens is your timer basically drops as well, and we'll talk about that when we get a little further in. There's one last piece of information. There was a fourth piece which deals with the vehicle. So let's do this. Basically, in this situation, there was a vehicle, and one vehicle was disposed of, right? The 5-year property at $18,125 was disposed of. And if you take a look, basically you got to remember that to take it off the books, you have to also get rid of your accumulated depreciation. And then a new truck was put on the books for $23,300. Now, when you exchange one truck for another, because that's what the problem dealt with, it basically qualifies as a like-kind exchange. And instead of effectively reporting a gain or loss on sale, you adjust your basis in the property. So if we look at the invoice on the delivery van, here's what we're told. That basically the cost of the delivery van was $30,400 plus destination charges, less a trade-in of $9,000 plus sales tax, got you to $23,300. So the question is, what's happening here? The old van is traded in for a new van, and what is the tax basis in the new van? Well, as Liz likes to do, and I agree with, what we try to do sometimes is prepare a journal entry, and it makes it simpler to understand what's going on here. So back on that spreadsheet, if we looked at the accumulated depreciation, that was $16,037. That has to come off of the books as a debit. We also have to get rid of the old van, get that off the books, which is $18,125. And we know that the cost of the new van, including the sales tax and what you paid, is $23,300. So the difference must be the cost of the new van, which effectively is $25,333. Not a very tough problem in my opinion. So in that situation, basically, we can again do our little calculator, but the correct answer is delivery van should have a basis of $25,388. We hit accept, and again, we have now basically answered the questions. Now, notice here, you want to make sure you didn't miss any, right, with respect to this. So notice that each of the 4 boxes is check marked. Now, we still have to get on to the next section. So we're again watching the clock, okay, wherever we can. We want to watch that clock. And basically notice that when you get into the 2-minute mark, remember at 3 minutes what happens is it starts to go down to seconds, and at the 2-minute mark it goes to red. So you're really under the wire. And again, at this point in time, Liz will tell you this, and I will too. If you're not done, guess, okay? Because you remember guessing you got a shot. No, if you don't guess, you got nothing. So guessing is not bad. It doesn't count against you. All right, so we're getting there. So basically, we then take a look at the top right-hand box, have to submit this testlet. So once all the questions have been answered, okay, and you always should answer the question with something, hit Submit Testlet, and then you're on to your next issue. Having said that, gang, I think we would all agree, because we're sitting here and saying, holy moly, how long would it take to do this? These are not easy. These document review simulations, what this requires, and again, I want to remind everybody, this is starting July 1st. Okay, we're here, we have to be prepared for this. So you have to incorporate in all of your studies a number of document review simulations that you want to go through and get very comfortable with the instructions, how to work this through. So we have a sample discussion like today on each of these sections. It's in Reg, it's in Audit, it's in FAR. And again, in our CPA review course that we sell, we have all of the new document simulations that the AICPA has provided, and we've added a bunch more for you to get comfortable in this area. So if you'd like to call us or chat about looking at our product, we'd be happy to talk with you about it. With that, I'm going to turn it back to Val here for just a minute and see if we've had some questions along the line. Val?
Thanks, Jack. Yes, we did have a question come in. As you worked through that simulation, there was a lot of information and numbers and various things that you had to try and keep your head wrapped around. And so one of the questions came in is when they go to take the test, do they get something to take notes on so that they can jot down notes for themselves?
Hi, this is Liz Kohler. Yes, you do. You're handed with a note card that almost serves like a whiteboard, and you can fill out both sides of the card. It's not erasable, though, so when you complete the card and fill it out, you have to hand it in to the proctor to get a new card.
Thanks, Liz. And another question for the sake of the audience. Somebody wants to know if all of the simulations in the exam are going to be DRSs, or will there be some of the legacy format?
They have told us that in FAR, Audit, and Reg, one of the simulations will be a document review simulation. And in each of those sections, another simulation is going to be a research sim, like Jack showed you how you searched the authoritative literature. And then the remainder are going to be the legacy sims. So in FAR, you should expect to see 5 normal task-based sims, 1 research sim, and 1 document review sim. Audit will be the same format, 5 task-based sims, 1 research sim, and 1 document review simulation. Reg has in total 6 simulations. It's slightly less because the exam's a 3-hour exam, as opposed to Audit and FAR, which are 4 hours. And so Reg, you would expect to see 4 task-based sims, 1 research sim, and 1 document review sim.
And knowing that the exam's changing in April, do you see that changing come April 1st?
Unfortunately, yes. They plan to, in April 2017, introduce a new format. In addition to the document review simulation, they're going to add an enhanced task-based simulation. This type of sim, they anticipate candidates will take between 50 and 30 minutes to complete. It's an integrative problem that includes exhibits where the candidate's going to have to evaluate and analyze additional information. And they're going to increase the number of sims to 8 to 9 sims across FAR, Audit, and Reg. And for the first time, BEC is going to have sims in April 2017. And they've told us they expect that number of sims to be 4 to 5.
So Liz, just as a comment, if I could just jump in there, it's a really good question, because what you would be saying and I would be saying is you want to get the CPA exam done before April of next year.
Absolutely.
And also, I guess the audience ought to know that we've been working really hard on the April 2017 exam, and you've created, what, 100 new simulations, right?
That's correct. We have 100 new simulations. We have a whole new format and dashboard ready to go for our students for the 2017 exam. As Jack mentioned, we already have the document review simulations in the 3 sections that we'll begin testing in July.
Okay, we have a couple more questions. Because Reg right now is so short, it's only 3 hours, how much extra time should candidates build in for the document review sim, and how much should we spend on the multiple choice?
Oh, good question.
Well, the multiple choice questions are adaptive. And so what that means is in your first testlet of multiple choice questions, you'll get 24 questions. They are going to be of moderate difficulty. If you do well on that testlet, your second testlet of 24 multiple choice questions will contain questions that are more difficult. And then finally, by the time you get to the third testlet, your multiple choice questions will be even more difficult if you've done well. And so what we generally tell candidates is you want to spend about a minute per question in the first testlet, and then you can average a minute to a minute and a half in the second and third testlet, leaving yourself with about 12 and a half minutes to answer each of the simulations. Now in the current format, what we recommend, and this is a really important tip, and when you get to the fourth testlet where you'll have your 6 simulations, what I strongly encourage you to do is to open up all the sims and see what they're asking you, and to triage those sims. Isolate the 2 that you like the most, then 2 that you feel comfortable but don't know that you'll get all the points that you possibly could get on the first set, and then save the 2 you like the least for the very end. So do the 2 you like the most first, then move to the 2 that you feel somewhat comfortable about, and save the last 2 for the 2 that you maybe will struggle on. And that may be a document review sim, it may be a research question, but it's really important that you assess across the board what you're being asked and where you feel the strongest. Save your weakest problem for the very end so that if you run out of time, you're not leaving points on the table. You want to make sure that you can answer the questions that you can get the most points with first. I also encourage candidates to save the research for the end, because you sometimes can get lost in that problem, and the time can dwindle very quickly on you if you get lost in the research part of the research sim. So, you know, it's something you can practice in our software, but be careful that you don't let that time slip away.
Thanks. Those are great tips. Another question came in wondering if there was a timer or a limit on each of the 3 multiple choice testlets. In other words, will the exam shut them out and push them to the next testlet even if they haven't finished?
No, there's no timer in between. It's up to you to manage your own clock.
Okay. Another question came in for existing Surgent CPA customers. Will the software content be updated to include the practice DR simulations? And I think you've kind of answered that already, but maybe you could just say that specifically.
Yeah, it's there.
It's already in there, and for any existing customers that move into the 2017 exam, they will have all the updated content at no additional charge. It's included in everything.
So right now, if you're studying for the exam right now, these document sims and other ones we've created are already in the material, ready for you to work on.
Right, and so just to kind of add to that, they're currently in the FAR, ODD, and REG sections. They're not in the BEC yet because those will not be implemented into the exam until April, but they will also then be added to the BEC when we push out our update. Another question came in with regard to the simulations. You don't hit, they just want to clarify, you don't hit the Submit Testlet button until you've finished all of the simulation questions in their entirety.
That's correct. You click the next button to move between the sims, and you click Submit Testlet when you're done.
Okay, awesome. That appears to be all questions that we've gotten submitted. I want to thank each and every one for attending today's webinar. If you have any questions whatsoever, please feel free to reach out to us. You can always submit questions to cpareview@surgent.com, and we will get answers to those questions. And I hope for those of you that aren't customers of Surgent, it's important to know that our software will not time out on you. That means that you can purchase our program, and regardless of when you're going to sit, we will be there with you until you pass the exam. So again, thanks everyone, and we will be sharing a recording of this message to everybody in attendance today so that you can refer back to it and brush up on your REG DRS simulations. Thanks everyone.
Thank you.
Thank you.